Hey everyone, Alex Ionescu here. Welcome to Investor's Guide to the Galaxy. Tesla receives investment grade rating. Tesla sales in China. Best January ever. CNBC Tesla bear talks about Tesla. Although before we start, if you find this video helpful, it would mean a lot to me if you crashed the like button and subscribe to my channel. It's totally free and takes just a split second. If you want to show more appreciation, consider subscribing to my Patreon. Now, let's dive right into it. Tesla stock price. Yesterday, up almost 8%. Year to date, up 83%. Past year, down 40%. Past 5 years, up 883%. Let's figure out why Tesla stock jumped today. First, according to Markets Insider, Moody's Investor Service has upgraded Tesla bonds to investment grade status for the first time, saying that the Elon Musk-run carmaker's dominance of the EV market and its efforts to keep costs low have boosted its ability to repay its debt. It's the second ratings agency to lift the EV maker out of junk territory following S&P in October 2022. The agency, which judges companies' ability to pay back bondholders, lifted the company's rating by one notch Monday. It now gives Tesla a Baa3 rating, meaning it's no longer labeling its bonds as junk or purely speculative, the outlook used for companies that might struggle to repay their debts. The rating action reflects Moody's expectation that Tesla will remain one of the foremost manufacturers of battery electric vehicles with an expanding global presence and very high profitability. And the second reason, I think, look at this tweet from Roland Pircher. With the latest Tesla insurance numbers out of China and only 2 weeks left in the quarter, the big picture is becoming clearer. So in China, this January was the best January ever. This February was the third best February ever. March has the potential to beat 78,000 units and become the best March ever. This quarter has a high probability of being the best quarter ever by a clear distance. So in China, we have Tesla sales of 49,000 units in the first 2 weeks of this month. So we have 2 weeks left. So let's calculate a little bit. So that's 24,500 cars per week times 4, the full quarter, 98,000. If Tesla sales are the same as the last 2 weeks. What happened to Tesla stock after this upgrade and the good news from China? It skyrocketed more than 7%. Don't get too excited yet. Today we will have the FOMC meeting at 12:50 p.m. Eastern Time. This is the most important FOMC. Jerome Powell can crash or help the markets today. Take a look at this tweet from TED Talks Macro. FOMC scenarios: 50 BPS hike, outlier, short risk assets, bear trend resumes. 25 BPS hike most likely, nothing burger, the dot plot plus press conference dictate the market's move. Pause, second most likely, get very long Bitcoin. Cut, outlier, mortgage the house and buy Bitcoin. And he added a picture of Michael Saylor, founder and CEO of MicroStrategy, a Bitcoin bull. This news just came in. UK inflation rate breaks 3-month stretch of declines with surprise rise to 10.5%. This certainly doesn't help Jerome Powell's decision to pause cut rates. We will see. And now some entertaining content for you. Dan Nathan, the CNBC Tesla bear, talks about Tesla.
Here's a public service announcement. Dan is going to talk about Tesla right now. So if it bothers you that he's going to be bearish,
what does that mean?
You know, just
PSA. I'm going to sound a lot smarter than you think. No. Okay. So we just talked about Nike in China, right? So why did the stock rally 7% today? Because some third-party data about some China sales. Okay. We know that they missed China sales last quarter. We know that they cut prices last quarter. We know that, we just talked about margins. We just talked about a U.S. multinational is guiding down for margins for the year. Well, guess what, people? Last year, gross margins for Tesla were 25.6%. This year, consensus has them at 22.14%. Is that incorporated incorporating the potential for a recession here in the U.S. or abroad? Is it pricing in any potential for all the competition that's coming online or any geopolitical issues as it might relate to China and Taiwan? So my point is, I actually think, flat to down EPS, which is what is consensus right now, might be the best case scenario, and margins could be under pressure further. So if this is a growth stock, if it's a margin story, and the margins and the earnings might be worse than what's expected right now, and I don't know how you could listen to everything I just said and not think that that's going to be the case, then the stock really shouldn't be rallying, in my opinion.
Guys laughing. It's almost like you're saying, I can't understand why you would listen to me and not believe everything that I just said because I am right, which may be the case. But there is a whole other argument that says, well, right now, every other EV maker, including the legacy OEMs, are also cutting price. And there is an opportunity for Tesla, the growth stock, to actually grow and claim market share in the face of weakness from what had been viewed as the oncoming competition, which doesn't seem so fierce anymore. What do you think?
Well, clearly it shows pricing power in terms of their ability to kind of reduce costs, offer discounts, and look to take market share. I'm kind of with Dan, though. Like, when you have declining margins, it makes for it flies in the face of long-term accretive growth and stock performance. So, I do think it's somewhat of a challenging backdrop. With that said, there have been so many people that have been carried out trying to short Tesla that I just refuse to do it.
You know how much money was made short Tesla last year? $700 billion.
Okay,
I'm just saying,
how much money was lost before then? Those people were, how much money was lost before then? And how many of those people survived going into that situation?
I'm not saying was made on the short side, but what I'm saying is that it went from $1.2 trillion at the end of 2021 down to, what was it, $300 billion just, 2 months ago. So what I'm saying is we got a market here, okay, and it's pretty wide, and where the stock has been trading over the last few months is really at the low end of that. And so they actually have all of the risk. Every OEM on the planet, okay, is focused on their market share in EVs. All right, so they have the most to lose. Not a $55 billion market cap company like GM, which is going to, they're going to be around in 100 years, GM, okay? Like, the jury's still out, in my opinion, whether Tesla's going to be around. And you can say, well, they're not particularly profitable and this, that, whatever. But, that's the way I think about it. Who's got the most to lose? It's not GM and Ford.
GM, General Motors, will be here in 100 years. Yeah, right. Maybe GM will be here in 100 years, but in history books, saying, kids, don't do this. Do you agree with Big Nose Dan Nathan or the beautiful anchor Melissa Lee? Tell me in the comment below. If you like this video, please smash the like button so that other people like you see this video, and don't forget to subscribe to my channel. Thank you very much. I appreciate all of you that watch my videos. See you next time.